Well, welcome everybody to another edition of the monthly University of Idaho, Utah State University, and South Dakota State University Sheep and Goat webinar. Um, for those of you who don't know the team, I'm Melinda Ellison. I'm Extension Sheep Specialist with the University of Idaho. Also from the University of Idaho is Carmen Wilmore, who co-hosts this with us, and she kind of delves in the realm of goats more. We also have Utah State University Extension Sheep and Goat Specialist Chad Page. And finally, last but not least, Jalen Whaley with South Dakota State University, who is a regional sheep specialist with South Dakota. So our team welcomes you. We're grateful to have you here today, and we're looking forward to this upcoming talk that we're going to have today. A couple housekeeping things. If you guys have questions for our speaker as we go through, put them in the Q&A box and we'll make sure that he gets them. And also, as usual, we'll have another survey that'll pop up at the end, and we're always happy to get your feedback if you're willing. Hopefully it doesn't take very long for you, but we do use that feedback and we appreciate the time you take on those. So without further ado, I would like to welcome today Tyler Cousins, who is the director of the Livestock Marketing Information Center. And a couple months ago, we had a goat market outlook, and today we're bringing you the sheep and lamb market outlook. So thank you, Dr. Cousins, for being here, and I will let you take it from here.
All right. Well, thank you, Melinda, and thank you all for joining the webinar here. So as Melinda mentioned there, give some sheep and market outlook here, kind of some things that are going on here. So I guess with that, I'll kind of get started with what I've got planned for the next few minutes here. So I guess to start off here with just some background on LMIC, who we are, what we do, what we're about. So we are technically a nonprofit, and we are housed under Colorado State University. And our sole mission is to support the land grant mission and those extension efforts. And so how we do that is through a lot of data capture, analysis, research, giving talks such as these to industry professionals and producers. We do support 29 land grant universities. So you can see the map there on the upper left of this slide. Gives you an indication of just the land grant universities that we're working with. And we support a lot of the work that those extension professionals are doing, just their missions there. We do also work with 8 USDA agencies there. So you can see a list of those at the bottom there. We also do have some associate members that we work with. A couple of that I will note specifically are Farm Bureau, American Sheep Industry Association. We do work with National Cattle and Beef Association and the Pork Board. We do have a couple other entities that we are part of as far as CoBank. We are writers, ghost writers for the Daily Livestock Report. That's a little bit more cattle and hog focused, but if that's of interest to you, I'd recommend looking that up there. We do write those. We write about half of those roughly. So just to give you an idea of who we are, what we do. Moving on, just an outline of what I'm hoping to discuss here. So kind of some big picture discussion as far as sheep and lamb inventories, as far as that report that came out back in January. That's kind of our one piece of information that we get as far as a snapshot of inventory levels. So kind of giving us some background on what that report gave us as far as expected inventories there. Then move into some discussion on forage and crops, just kind of giving an idea of what's going on as far as range of pasture conditions, crop just availability, prices, and so forth on that. Then we'll start moving into some market update and outlook on the sheep and lamb side of things. Kind of most of the bulk of the discussion will be on this market update and outlook there. So with that, let's get started here. So January 1, 2024, this was the inventory levels that we got from USDA's NASS. I think the biggest thing to just kind of point out there, all sheep and lambs down almost 2%. And another thing that I'll point out here is just the breeding sheep and lamb side of things that was down 2% there, right? So that's kind of one of those indicators as far as potential inventory levels moving forward over the next 1 to 2 years. So having a lower breeding of sheep and lamb inventory level there is kind of an indication that we'll probably expect to see inventory levels continue to decline over the next 1 to 2 years. So that's sort of my expectation here. Also, the last bottom line there, market sheep and lambs, see that was down just over 2% there. So a little bit lower number as far as sheep and lamb numbers, which I think is pretty interesting here, and get into a little bit more of that discussion here in a the next few slides. So graphically here, just kind of showing the trend as far as total sheep and lamb populations here over the last couple of decades. And so you can see there that 2024, there's that about 2% decline. 2025, I had my expectation in there as far as the just expectations for inventory levels here over the next 1 to 2 years. See kind of a general downward trend, kind of following the overall trend line here for the last couple decades here. So nothing too terribly surprising there as far as expectations and inventory levels. So just kind of putting it on a map sort of depiction here of as far as how inventory levels are kind of laid out across the state levels here. So you can see, as expected, the larger inventory levels there falling in Texas and California. But then you have a lot more lambs kind of centered across the Mountain West region there, Colorado, Wyoming, Utah, Nevada, Montana, South Dakota. And so, I think the thing to kind of keep in mind as we look at where those pockets of lambs inventory levels are, just keep in mind some of the changes that we had year over year from 23 to 24. We can see most of those major lamb producing states also saw declines from year to year. So that's kind of playing into that overall 2% decline in just total sheep and lamb inventory levels. One of the things that I also pointed out there was the breeding ewes 1 year and older, kind of that breeding flock side of things, and just kind of an indication for inventory levels moving forward. You can see still following kind of that general downward trend over the last couple of decades here. My expectation for 24 and 25, you can see those are actually down about 1 to 2% here. And so, that's going to factor into our overall supplies over the next couple of years. And same kind of discussion here, putting it into a state level kind of depiction here. You can see the breeding ewes 1 year and older, kind of following into those same key states there, Texas, California, but then you have your Mountain West regions there. But if you look at it from just a percentage change year over year, kind of the same story there. Those major states that had a lot of the sheep and lamb breeding flock inventories are down from a year ago. So kind of playing into that general trend there. And I'll note just South Dakota, they're down about 10%. But I think, looking at in general, it's not too terribly far aligned for what we saw as far as overall breeding flock inventories down, being down about 2%. So that kind of gives us our kind of big picture discussion as far as inventory levels go. And kind of moving into some forage and crop discussion here. I like to have some of this discussion here because it gives us an idea of what potentially producers are facing as far as just overall feed availability, costs for feeding lambs, and just these various regions, because that can vary from region to region. And so I think it's a good idea to kind of look into some of these other factors that are playing into just overall production for producers here. And I'd like to start off with just kind of the drought monitor map here. And so this was the most recent one that was released last Thursday. We'll have another one that comes out tomorrow. But I think the bigger thing to kind of point out here is we kind of look at those states that had a lot of the inventory there, kind of Texas, California. There are some pockets of dryness, Texas, kind of in that western part of the state there. There's definitely some extreme and exceptional D3 and D4 drought kind of popping up there. But I think if we look at some of the states kind of related to the producers and folks that are on this webinar, kind of looking at Idaho, Montana, Wyoming, South Dakota, Utah, Colorado, there's definitely some drought and some pockets of dryness across those kind of Mountain West regions there. So I think that is a factor to keep in mind here, just from a feed availability, range and pasture conditions. So kind of keep this map in mind here as I talk through the next few slides, as we kind of look at range of pasture conditions that are reported by USDA. So, we have the drought monitor map, kind of gives us an idea of what's going on as far as kind of bigger picture drought implications, but we also have range of pasture conditions. And so looking at this graph here, the way to kind of look at this, right, we're looking at the percentage of range of pasture that is rated poor and very poor, right? So a higher percentage means that range of pasture conditions are worse. So we actually want a lower percentage here. And so this is our national range of pasture conditions for the U.S. So we can see it's actually tracking pretty close to where it was a year ago and kind of the 5-year average, the red line there. So I don't think anything too terribly out of line, and potentially showing a little bit better conditions than where we were a year ago. But I think if we start breaking this out by region, we could see that Western region started to track a little bit higher here over the last few weeks, seeing a higher percentage of range of pasture rated poor is very poor for the Western region. And I think if you keep in mind the drought monitor map, those pockets of dryness there in Montana, Idaho, and just kind of some of those areas in the northern part of the Rockies. I would argue that's probably factoring into some of this higher rating for range of pasture conditions in the western U.S. But I think all in all, considered to where we were a year ago and the 5-year average, kind of tracking not too far in line. But I think it's just something at least worth watching because that does factor into just overall range of pasture conditions and just feed availability as we kind of start to move into our fall season here for these producers. Another region here, the Great Plains region. So we're kind of looking at the North and South Dakota, parts of Nebraska, potentially Kansas. Can see that some of those ratings there have crept up here in the last few weeks, higher than we were a year ago, but still below the 5-year average. But I think that just sort of highlights some of the drought monitor map kind of pockets of dryness that we're seeing in that region there. Southern Plains here, kind of looking at Oklahoma, Texas, parts of New Mexico. You can see that's actually tracking a little bit better than we were a year ago and actually the 5-year average. So I think that's a positive sign for the Southern Plains region because things can turn pretty quick in that part of the U.S. as far as dryness goes. So things are looking a little bit better there. So I think kind of bringing this a little bit together as far as forage discussion and so forth, is kind of looking at prices and just input costs for the producers here. And so one of the big things is just hay as a feed component there and prices for that. So we're looking at national prices here for alfalfa hay on a monthly basis. And we can see that the first 2 months here, so we're looking at this from a crop year, which is May to April. So if it looks a little bit different, it's not on a calendar year, it's on a crop year. So May and June, you can see there on the left, we're actually about where they were for the 5-year average, so about $200 per ton. And that's a significant improvement from where we were a year ago, which was about 260 to 280 per ton. So definitely an improvement there as far as just overall costs, input costs for feed for these producers here from an alfalfa hay standpoint. My expectation would be that prices will probably trend about where the 5-year average is, the red line here, maybe potentially move a little bit lower. We have seen a little bit higher number of hay acres from recent reports here from USDA. Hay stocks have definitely improved. So I think just overall hay availability for producers is there if they need it. And so I think that's part of the factor here is we look at some of the dryness here. Are some of these producers going to have to be looking for other feed sources potentially here? And so, that cost starts to factor into things for just the overall production of these lambs. Other hay is another one to look at here. A little bit higher price than the 5-year average, but below where we were a year ago, sitting at about 150 to 155 bucks per ton. So a little bit lower than we were a year ago, but I think, kind of a similar story there. Probably see this other hay price track pretty similar to the 5-year average, just kind of on that same discussion there that we're seeing stock levels higher than where they were a year ago, and just a little bit more hay acres in production there. So that should help, keep some of these prices a little bit more in check for producers. Other thing I kind of look at just from a feed component as we kind of get to more into maybe a feedlot setting there is just, price for corn. It's definitely been trending very much lower here. Actually, this last week, most recent price was actually just below $4. We haven't seen that in a couple of years. So, corn price is definitely a lot lower. We still haven't gotten into full swing of harvest there. So I think there's still some potential for volatility there and actually getting an idea of what actually the actual production levels will be for corn. But you can see there what I have mapped out as far as the green and orange lines. The orange lines there are 2024 futures prices. So you can see what the market is expecting prices to be for the rest of the year. So sitting at it or just below that $4 range. But at the green lines there, we start looking at futures prices for 2025. Market's kind of expecting prices to be just above $4, maybe around 440, 450 is kind of where things are where prices are expected from a market standpoint. And those are prices as of yesterday. So, kind of some expectation there. So, from some of those producers, kind of what they're looking at if they need to get some of those feed input costs kind of locked in there, kind of some of those expectations. That's a pretty low price. And so we've seen that trend here for going on almost a year now. There's this price well below $5 and actually touching just below $4. So, some relief there on the input cost side of things for feed for these producers. And so I think that's a little bit positive sign there just from a just input cost side of things. So kind of moving into some of this more market discussion on the sheep and lamb side of things, I have kind of two ways I want to discuss this. I'll discuss the supply side here, and then we'll talk about prices. So let's jump into some of the supply discussion here. So I always kind of start off with sort of the weekly sheep and lamb slaughter. And so looking at this from year to date, so this would be through basically the first week of August, weekly sheep and lamb slaughter is actually up about 5%. So keep in mind that, the very first slide that I talked about with the inventory levels, we actually had market lambs actually down almost 2%, right? And so, a lot of what's driving this higher sheep and lamb slaughter is actually mature sheep slaughter. That's actually up 12% year to date. And so you can see most of the weeks this year, as far as mature sheep slaughter have been going, is actually higher than where they were a year ago and even above the 5-year average, right? And so I think this, this kind of factors into just the overall production picture over the next few years as well. If we're seeing a little bit higher mature sheep slaughter, is that going to impact just overall breeding herd, breeding flock supplies and just the ability for the industry to produce to increase the overall inventory levels moving forward. So we have to keep this in mind as just an indication of potential inventory levels moving forward. So slicing this just a little bit different way, mature sheep slaughter as a percentage of total sheep slaughter on a weekly basis here. So all I'm doing is taking the mature sheep slaughter and dividing by total sheep and lamb slaughter and giving a percentage there. And so you can see kind of the typical level there is about, for this time of year, is about 6 to 7%. But the blue line there is showing us that we're actually about 7%, and actually some weeks have actually been above 8% there. So this is a little bit higher than where we were a year ago and definitely higher than the 5-year average. So just another way of looking at the mature sheep slaughter and sort of an indication of just overall, breeding flock inventory levels moving forward here. Definitely an indication that we probably will likely expect to see some lower breeding flock levels when we come to January 1, 2025, just based on the amount of mature sheep slaughter that we're seeing here moving forward. Now, the other thing to look at here is lamb and yearling dressed weights. So year to date, they're actually down 2.5%. So that's about 2 pounds compared to a year ago. You can see that's well below the 5-year average. So we're slaughtering a lot more of these lambs moving forward, but they're actually at a lower weight. And so we're tracking quite a bit lower than where we were a year ago. And you can see a year ago is well below the 5-year average. So we're definitely seeing a lot smaller dressed weights on a weekly basis here. And so, why I bring this up is if we factor in the 5% increase in just sheep and lamb slaughter, but we have a lower dressed weight. So the lower dressed weight is partially offsetting the higher 5% sheep and lamb slaughter. So the lower dressed weight combined with a higher sheep and lamb slaughter is actually translating to a 3% increase in lamb and mutton production. So we're still seeing a little bit higher production here, but it's at a little bit lower rate than we would expect just based on the lower dressed weights that we've seen year to date here. And so I think you can see here the last few weeks, this lamb and mutton production has definitely been a little bit higher than a year ago, getting closer to the 5-year average. So watching this one pretty closely because this kind of gives us an idea of, as far as overall supply levels in the supply chain moving forward. And this starts to have some of those impacts on overall prices moving forward. Now, one of the things to kind of keep in mind is just lamb and mutton in cold storage. This is kind of one of those indicators that we look at just from a supply standpoint to see if levels are building up, because if supply isn't moving through the supply chain, meaning demand is not pulling supply through the supply chain, consumers aren't demanding lamb, then it'll start to build up in cold storage. And so June being down 4%, I think that's a good indication that demand is still holding strong. We're not seeing these inventory levels build up in cold storage, because if they start to build up and get above a year ago, track a little bit closer to the 5-year average, that could be an indication that demand is slowing down, that consumers aren't purchasing the amount of lamb that they typically would. Maybe that could be price, or there's just other factors, inflationary factors that are influencing their purchasing decisions. So I would argue June being down 4% is a good indication that demand is still holding strong. We're not seeing the lamb supplies build up in cold storage. Demand is still pulling that product through the supply chain, and consumers are purchasing lamb. And I would say that's also a good thing to point out there, just from an import standpoint. So we're actually seeing a pretty good increase in lamb imports, actually up 38%. That's about 33 million pounds. So this is tracking well above where we were a year ago in the 5-year average. So the thing I will point out here is, even though we're up 38%, that product is still moving through supply chain, still being sold. Demand is still there for the lambs, because if we're importing this much lamb and we're not seeing it build up in cold storage, that means product is still moving through the supply chain. Consumers are still demanding this lamb. And there's a few other factors why we're seeing a little bit higher imports that I'll dig into as far as discussion here with prices, because we're still seeing pretty good prices. And so I think there's some economic opportunities for these suppliers to send more lamb to the U.S. here. But definitely something worth watching here. My expectation as far as lamb and mutton imports, you can see for 2024 and 2025, sitting well above that 300 million pounds mark there. That's kind of some of the little bit lower levels than where we were 21 and 22, but still some higher levels than what we have historically seen. I think I'll also point out here, the red line here is the Australia exchange rate to the US dollar. So I think you'll see sort of some similar trends there, right? So obviously a lower exchange rate, what that translates to is it's cheaper for the US to purchase lamb from Australia. But if you see a higher exchange rate, that means it's more expensive for the US to import lamb from Australia, right? And so you can see kind of 21 specifically, that exchange rate went down quite a bit. So we had a little bit more lamb come into that year there. But as we moved over the last couple of years, exchange rate has increased. And so that has been a factor into just the U.S. purchasing Australian product to bring in. So you can see my expectation for 25, seeing it sit about 325, 330, somewhere around there is roughly my expectation right now. So let's move into some of this price discussion here. So I kind of start off with a little bit bigger picture here, and I was talking about some of the demand and just the cold storage stocks and so forth. So we can actually see the green line there is the all lamb retail price. So this is actually a weekly price reported by AMS, and we aggregate it into a monthly price. The other three prices I'll just note are actually a Bureau of Labor Statistics. BLS doesn't actually have a retail price for lamb, so it's not a direct apples to apples comparison, but I think it's worth at least showing kind of where lamb stacks as far as overall retail prices compared to beef, pork, and chicken. So you can see most of the retail prices for the major meat categories have been tracking well above typical levels here and historic levels over the last couple of years here. But you can see lamb kind of getting above that $10, almost $11 mark there in these last few months. That's well above kind of that beef, where it's sitting at about $8. We had prices come out today into 8, and beef was actually $8.15, so that was actually a new record for beef. But pork and chicken are definitely holding pretty steady there. And so I think when you think about from just a consumer's base, when consumers in the store looking at in the meat case, right, they're evaluating from just a perspective of competing for each dollar, which meat gives them the best value. But I think you do have a base there as far as lamb goes that is a very strong consumer base for lamb. And kind of back to my argument that just supplies moving through supply chain and not seeing them build up. There's a strong base there still purchasing lamb, consuming lamb, even at the prices that we're seeing here over the last few months. in that 9 to 10, almost $11 range there. So I think a positive sign for the lamb industry and just overall consumption levels still moving forward very strong there for the consumers. And just a good thing to point out there. But I think it's kind of a good slide to just sort of depict what's going on as far as retail prices, what the consumers are seeing, and how they're kind of evaluating their purchasing decisions when they go to the grocery store. Now, kind of looking a little bit more, going down from the retail level to the wholesale level here, National Lamb cutout value, it's actually up about 5% or $22 per hundredweight from where it was a year ago. You can see it's been holding pretty steady there. The average is about 470, per hundredweight there. So definitely a strong value there for the cutout value. My expectation when I see it, I don't really see a reason for it to deviate too much here for the rest of the year. But still, typically, we do see some seasonality, but this year we haven't seen too much of that. So I think that's a positive sign that, demand is holding strong and products moving through there. And we're seeing these cutout value well above where we were a year ago and typical levels there. So I think kind of the thing to point out when we look at this cutout value, we're aggregating some of these primal values up to get that cutout value. And so looking at some of these primal values, specifically the shoulder here, you can see it's actually up about 2% or $7 per hundredweight as of this most recent week. But that's actually the lowest value that we've seen all year. It's actually been tracking at or above about $400 per hundredweight there. So a very strong value for the shoulder, well above where it was a year ago. The first half of 2023 is tracking about 360, so it holding about $40 above where it was a year ago through the first half of 2024 is definitely a positive sign and showing some strength there for the shoulder. I think will be interesting to watch to see how this kind of tracks through the rest of the year here, but I wouldn't expect it to track too much lower than what it has been through the first half of this year. Leg on the single leg price side of things, up about 18% or $83 per hundredweight from where it was a year ago. Again, a very strong price compared to where we were a year ago and even the 5-year average. So this leg price is still holding very strong, and that's one of the larger primal values that factors into the overall cutout value for lamb. So I think a stronger leg value here is definitely holding up and supporting that cutout value to keep it about that 470 range that I pointed out a couple of slides ago. Loin side of things, tracking very, very steady there. About that $700 per hundredweight there, 6% above where it was a year ago, or $37 per hundredweight. Seasonally we would see this price tend to track a little bit higher here now. So kind of watching that here over the next few months to see if this loin price will gain a little bit of momentum or not. But I think regardless where the loin price has been for the first 6 to 7 months, is definitely a strong price and very much in line with where we finished 2023. So likely to see this loin price continue to hold steady here for the next few months through the end of the year. Now looking at the lamb rack price, kind of a similar thing. Saw it move down a little bit. This is one of those higher valued cuts, higher price, and so this would be one of those cuts that consumers, when they're in the meat case looking at just prices, a little bit more sensitive to a rack price that is approaching $11 per pound. So I think a little bit lower rack price. It's just kind of a little bit of response from consumers, maybe looking at a little bit lower price, maybe like a leg, something where they can get a little bit more value for the overall lamb that they're hoping to purchase there, but still a positive price there, and pretty much typical levels of what we've seen over the last 5 years and last year as far as the rack price goes. So kind of bringing this back together, kind of pointed out about 4 of the primal values there. Kind of indicated that the leg is the kind of the main contributor there, and that one's been holding very, very strong. And so I think that's a good contributing factor into why we're seeing this lamb cutout value up about 5% from where it was a year ago. So watching this one to see if it'll kind of track about that 470 range through the rest of the year. And I think so. Kind of pointing out this lamb value and holding strong, right? Seeing those values hold strong through the value chain from the retail to wholesale, right? That starts to factor into overall prices for just fed lambs and feeder lambs. And so as we kind of look at what slaughter lamb prices have done over the last 6 to 7 months, tracking well above where they were a year ago. Only in recent months have we started to come close to where prices were a year ago. And I would argue that's just because we saw some pretty low prices at the start of 2023, and so prices holding fairly strong and tracking above typical levels. The red line there, I think, is a positive sign. Just for overall slaughter lamb prices, they're tracking about that. The average has actually been about $200 per hundredweight there through the the since about January. Um, so you can see there the green lines. I have my expectations as far as slaughter lamb prices for Q3 and Q4. So Q3 have that sitting at about buck 85, buck 90 is where I have my expectation there, and then Q4 is about 185. So level very similar to levels that we saw a year ago, and I would argue prices that are above where we typically would see them there. So I think a lot of that is just a factor from just a stronger cutout value, um, economic opportunity for these packing plants to pay a little bit more for these lambs and move some of these lambs through the supply chain. As you can see that they're definitely moving lambs through there. They're pulling them through. They're marketing them at a very good pace there. And so, product is moving through the supply chain. So I think that's a positive sign. Demand and supply are pushing and pulling in a good dynamic there to keep the markets moving in a positive direction, just from a economic standpoint. And LMIC, we look at feeder land prices. So we specifically look at a 3-market average, just from a price reporting standpoint. Prices can be a little bit. Not every market reports feeder prices every week. So we look at an average across Colorado, Texas, and South Dakota, and we look at 60 to 90 pound lamb prices. And so you can see prices have varied a bit here. We have had some weeks where there haven't been reports there, so you can see that's kind of why we have a straight line there through about June, May and June there. But regardless, I think I got my percentage wrong there, but that actually should be up about 13% from a year ago. That's $55 per hundredweight. So as far as these feeder lamb prices go, definitely well above where they have been last year and the 5-year average. And I would say that goes back to just these fed lamb prices and the lamb cutout value holding very strong. That makes its way down through the supply chain to, kind of the primary supply level here of these feeder lambs. And we're seeing those track pretty much well above where they were a year ago. You can see there my expectations for Q3 and Q4, about where they were a year ago. I think a lot of that is just sort of we're seeing prices and demand and supply start to come into alignment here, and so I think price is still holding very strong through the rest of this year as far as feeder land prices go for producers there. So I think a positive sign as far as just overall prices moving forward here for producers. Now, one of the things that LMIC does here is we do actually calculate an average return to lamb feeders. And so this is kind of a hypothetical scenario here, but try to be somewhat representative of a typical feeding operation based in Colorado. So the assumption that we make is that we're purchasing lambs at 70 pounds, and then we're going to sell them at 140 pounds. So we're putting 70 pounds of weight on them in the feedlot setting. And so you can see here as far as estimated returns. So these are basically returns above variable costs. So this does not factor in any fixed costs. But I think it gives you a gauge as far as profitability along the supply chain here. So you can see here in the last few months, there's been some months that have been negative, but by and large, generally positive returns here. You can see kind of in 22 and 23 there where was a stretch where returns were definitely negative there. Just some supply and demand dynamics kind of got out of line there, and so definitely influenced the overall profitability for these lamb feeders. But we can see a lot of that has gotten back in line. And a lot of these prices that we're seeing as far as fed lamb and feeder lambs, those are kind of the biggest variables that factor into overall feeding returns. And so I think seeing a positive feeding return here over the last few months in general, positive indication just from a industry-wide perspective. I think it's not really one of those things where this is trying to indicate who's winning and who's losing. I think overall, if you have an indication that lamb feeders are making money, we have strong feeder land prices, fed land prices, wholesale prices I mean, these are strong indications that across the supply chain, across the lamb sector, there's profitability out there. The economics are in the favor of the industry and the producers. And so I think when everybody's winning, that's a positive direction for the industry as a whole. And so I think that's kind of more the point I want to point out here. Just from looking at this lamb feeding returns, is it's a positive economic return for feeders, in which means that factors into just overall profitability across the lamb sector as well. And so one of the things, kind of taking that lamb feeding model and slicing it just a little bit different way, right? We're getting into this time frame here where we're going to see a lot more of these feeder lambs go into a feedlot setting. So producers are kind of sitting here making some of these decisions, and it kind of goes back to some of that discussion with just range and pasture conditions, feed availability. Every operation is a little bit different on how they can handle their lambs and how they want to market them. And so one of the things that I've kind of pulled together here is an estimated returns above total feed costs. Okay, and so the idea behind this table and this framework here is to give the producer an idea. Okay, maybe I don't like the price that I could potentially get for my 60 to 90 pound lambs. What if I want to retain ownership through a feedlot setting and sell them as fed lambs? Right. So the idea here is, okay, if you're going to do that, let's stay with our assumption that we would market them at we would sell our feeder lambs at 70 pounds. We're going to market them at 140 pounds. Okay. So that's kind of my assumptions here as far as the weight process here. But you can see in the bottom here, the other assumptions I have: average daily gain, looking at a little over three quarters of a pound per day, average daily gain. So that gives us a feed conversion of just almost 6 pounds fed per pound gain. And so you can see the cost structure there that I have. So that comes down to about 45 cents per pound fed. So I start to factor that into, okay, let's still say we want to market our feeder lambs at 70 pounds, okay? And based on the average daily gain assumption there of about 3/4 of a pound, that means they'll be on days on feed for about 90 pounds, okay? So you look at the table there, the left side in weight 70 pounds, days on feed 90, right? The red row there. So that translates to a total feed cost of $180 per head, okay? So that's if you take your lambs that are 70 pounds now, put them in a feedlot, feed them for 90 days, it's going to cost you $180 per head, okay? So then now we look at the table here and we look at the fed lamb price. And my expectation that I've put in there for a annual average fed lamb price is 210, okay? So if we assume that we can sell our lambs for 210 and we have a total feed cost of $180, just over $180 per head, and that translates to an estimated returns above total feed costs of $113.64. Okay. So you as a producer, the way you would evaluate this is, okay, if I'm going to retain the ownership of these lambs and I'm going to put them in there at 70 pounds and they're going to come out of there at 140 pounds, it's going to cost me $180, but my return, if it sells for $210, will be $113, almost $114 per head. All right. So that's where you're going to have to factor in, okay, what other costs do you have? So I know that's the return that I'll get above total feed costs. What are the costs will I have? Will it be yardage, transportation, labor, utilities, things like that? Maybe fixed costs. Do I have some taxes or things that I have to factor into this? Right. But that gives you an idea. If you do retain the ownership through the feeding phase, that kind of gives you an idea of your returns above total feed costs. Now, the way to look at this again, though, too, is let's say you think that price could actually be higher. And so I've just put in a general assumption there of 10%. So that means that price would be $231. Well, okay, so let's say you still put them in a feedlot at 70 pounds, sell them at 140 pounds. That means your total feed cost is still $180, but you're getting higher price. That means your returns above total feed cost will be $143. Conversely, though, if you think the price is actually going to be lower, 10% lower, let's say, that's actually $1.89. So then that means your estimated returns above total feed cost would be actually just above $84. So it kind of gives you a little bit of a scenario that you can sort of play with as far as your specific operation. But I also do have some other scenarios there. Let's say you don't want to put them in there at 70 pounds. Let's say you want to put them in there at a little bit heavier weight. Let's say you have some pretty good range of pasture. You could potentially sell them at 80 or 90 pounds. Let's go with 90 pounds. That means they're on feed for 64 days to get them to 140 pounds. So that means your total feed cost is $128, almost $129. let's say you sell them at the $210 assumption that I have there, that means your estimated returns would be just over $165 per head. Right. So it kind of gives you an idea of how you could maybe use this table just from your own operation, from a production standpoint. If you do want to potentially retain that ownership there of those lambs, but there is still that opportunity. You sell them at 70 pounds and you're done with them, you move them on down the road. But if you do want to retain that ownership, this is one way of kind of slicing the costs involved with retaining that ownership there, and give you an idea of just maybe some production decisions that you could use as we kind of move into this fall run of lambs here. So just kind of one of those analysis tools there to give you an idea of how to maybe just a different way to slice things and look at things. Just another option to consider as far as production goes. So kind of wrapping up a few things here, just want to point out a few things to consider here. Kind of touched on some of these points as far as drought and pasture conditions. I bring this up just as far as the feed availability and feed costs. I would argue as far as things go now, drought conditions definitely a little bit drier across the western U.S., kind of those regions where sheep and lamb production is occurring. But I think from a feed cost standpoint, definitely some of the lowest feed costs that we've seen in quite a few years here. So I think from an input cost standpoint, definitely a better picture for producers. But I think there's other factors involved there. Just from an economic standpoint, inflation is still a factor here. The Feds came out with, the CPI came out today, and a little bit of improvement there as far as overall CPI inflation levels there, but still, a lot of concern on that front, weighing on consumers and every dollar that they're spending. This factors into the ag economy and the producer standpoint of just input costs, specifically transportation, just getting these lambs to market, and this does factor into just feed costs as well. And just kind of on the economy inflation standpoint, that does factor into consumer demand. And not to turn this political here, but it is an election year, and that can factor into the economy and just overall consumer decisions moving forward here. So I think definitely some things to warrant as far as potential volatility in the markets here, and that factors into just overall demand for goods, specifically food and meat, and that factors into just overall prices for lamb moving forward. Kind of give you some indication as far as sheep inventory levels for 2025. Some of my expectations, right? So that'll be something to watch as we kind of start to finish out the year here. One of the things that I noted, earlier in the discussion here was just that mature sheep slaughter, definitely tracking higher than than I would have expected here. How is that going to influence overall sheep inventory in 2025? Kind of one of those factors looking into the next 1 to 2 years. So last slide here, wrapping things up. My expectation as far as sheep and lamb production through 24 and 25. 2024 actually have it up about 1%. So my expectation, we see some of this slaughter levels start to dwindle here a little bit, and then the dressed weights have definitely been tracking a little bit lower. So my expectation would be some of this overall slaughter start to slow down a little bit and see lamb production in 24 at about up about 1%. So 2025, my expectation, kind of the lower overall inventory levels, I would expect to see lamb production in 25 down maybe 1 to 2%. Now, feeder and slaughter lamb prices, I do have 24 up 20%. Keep in mind 23, we had some pretty low prices there in 2023. So comparison wise, when you look at things year over year, maybe look like a pretty good price increase there is 20%. But I think keep in mind that 23, we had some pretty low prices there. So, but definitely still some strong prices here in 24. Overall, 2025 prices, expect those to be down 1 to 5%. A lot of that is just assumption that demand will hold pretty strong. But just overall production levels down there, inflation still being a factor. I think that will start to influence just overall lamb prices in 2025. Maybe to the pressure them a little bit lower is sort of my expectation as far as lamb prices in 2025. But I think keep in mind, we're still seeing very good prices here in 2024. So even though we're seeing expecting a 1 to maybe 1.5% decline in prices in 25, keep in mind we're still having pretty good prices here in 24. So I think year-over-year comparison-wise, still strong prices for 2025 if we look at it from over a 5 to 10 year standpoint. So, I think overall, lamb and lamb production and price is still looking very strong and tracking pretty similar to where we have seen over the last um, 1 to almost 2 years here. So that kind of wraps up things. And so thank you for your time. And I'll pass it back to Melinda if we have any questions or other things to discuss.
Perfect. Thank you so much for sharing all that information. I, for one, love to always see this. So this time of year for myself. So just as a reminder to all of our attendees, if you have questions, put them in the Q&A box for us so we can make sure we get them answered. We'll just start off with the very first one, which can you quantify exactly what age you're talking about sheep going from lambs to mature animals on the slaughter side?
On the slaughter side? Yeah, I mean, so we're looking at that, roughly 12 months to 14-month age. Kind of that would be the slaughter age range that we're looking there as far as market ready lambs.
Okay. So one of the things that we all probably have some idea, but we seem like we've had an increased sort of sustained demand for lamb. Do you have any thoughts on where that came from, what it's going to look like in the future?
Yeah, so I think some of the internal work that I do as far as demand indices, you have to make some assumptions to kind of calculate some of those indices. We saw a pretty good jump as far as just overall indications of demand, kind of right after COVID. Everybody was at home, cooking at home, and so there was arguably a little bit more money in the bank for them, and so they had opportunities to maybe try some different things. I think consumers are used to having lamb, when they go to go have a nice dinner or something along those lines. And so now they have the opportunity to try and cook those things at home. And so I think there was some demand increase there. And I think some of that has continued over this last few years. And I was kind of point back to you also a report that was conducted by the land board, as far as who the primary consumers are. So they're typically those folks that are higher educated, have a higher income level, live in urban areas, and kind of have a tradition associated with consuming lamb. And so I think there's still a strong base there that is consuming lamb, and they've gotten maybe have figured out how to cook it at home and learn how to consume it at home. And so I think a lot of that demand has continued over these last few years, and I think that's a positive direction considering where prices have been. To see lamb still moving through, that means that base there, as far as the heavy lamb consumers, are still there consuming a lot of this lamb. And I would argue that for inflation to be going where it has been over the last few years, and for these consumers to still be purchasing lamb, I would say that demand is actually stronger than we might expect. And so I think there's definitely an opportunity there from a domestic standpoint to really capture a lot of that base and really provide a value, a high quality product, good eating experience. Because I think that demand is there. For these last few years, the indices that I have that I track to just get a gauge for demand, I think it's still there. Yeah, it's moved a little bit lower here the last few years, but I would say that's just somewhat of a response to just a little bit higher prices. But I think we get some of these inflationary things in check. Consumers get a little bit more comfort as far as just money in the bank and so forth. I think they're still going to be eating their lamb, and demand will still be there.
I agree with you, and I think it's a really amazing place for our industry to be right now. So you've had a couple questions about the ethnic market and whether that ethnic demand will continue. Will it become stronger? What do you think there? Any unique opportunities that you're seeing from that perspective?
Yeah, so the ethnic markets can be a little bit of a tricky one, just as far as the data availability standpoint, because the way some of those animals are sold, it's not always reported in the data that USDA collects. So it gets to be a little bit tricky, and it can be highly regional, just from my understanding. But I think there definitely are opportunities, and I think from a producer, if you see there are opportunities there, and you have a pretty strong base there that wants to purchase lambs, I would one of the things that I track is what holidays are coming up, kind of on a weekly basis there, because they do kind of ebb and flow as far as when they pop up throughout the year, and there is some slight correlation as far as prices being a little bit stronger when those holidays do come around. But I think that's going to vary based on the producer, their location, and their willingness to kind of step into that market. Because I think it's going to be kind of that risk preference for everybody's going to be a little bit different. Maybe you want to be that producer who's a pretty traditional production system there and wants to market them in a kind of the standard way through the supply chain. Nothing wrong with that. I think if you're a producer and you have those opportunities to look at that markets, I think they're there. But I think you're going to have to, have a marketing plan in place and have some of those buyers in line. So I think it's just going to vary based on producer, how they want to handle their operation, what's best for their operation.
Sure. Perfect. This question is asking you to expand a little bit on why, if the production of these animals is down, why are we seeing lower prices associated with that?
Yeah, I think I guess touching first on the production side of things, the smaller weights and so forth, some of that could be just factors of just I would argue that some of that is market dynamics pulling these lamps through. Demand is there to pull them through. But I think it's prices being down. I would argue I don't know that they're necessarily tied to each other. I would say it's more just that I would say prices are still holding very strong compared to where we have seen them. And obviously this can be highly regional as far as prices and what you're getting. But I would say that from an economic standpoint, the lambs going through there at a little bit lower weight, but we're seeing a higher number. To me, that indicates that demand is pulling these lambs through. We're not seeing these get backed up. We start to see weight start to creep up, and slaughter levels start to go down, and that's a signal that demand might be slowing down. They're not getting these lambs marketed through there. They don't need them. So I would argue that although we're seeing a little bit lower weights, but still seeing a higher rate of slaughter is a strong indication that from a supply and demand standpoint, demand is pulling these lambs through. And so I'd argue that should be price supportive moving forward through the rest of this year here. And I think I would argue that we've seen these prices still hold pretty strong where they have been in the last year or so. So I think from just an economic standpoint, supply and demand, those dynamics are pushing and pulling, and we're not seeing things get too far out of line.
Yeah. So kind of along those same lines, we had a question, where are you getting the information specifically that's suggesting the decline in production?
The decline in production?
Yeah.
Well, I think it just goes back to, we're looking at, this is all USDA AMS data. So it's not anything that I'm pulling out of thin air or anything like that. This is reported data, reports. I can give you these reports if you want to go pull the data yourself. I'm more than happy to give you the data that we have. This is publicly available information. But as far as overall production being down about 3%, right, it goes back to that factor. We have lamb slaughter up about 5%, but we have our weights down about 2% or about 2 pounds, 2.5% down, right? So we have a higher rate, but we have a lower slaughter weight coming through. So the lower slaughter weight is partially offsetting the higher production the higher slaughter number to give us that 3% increase in overall production. Does that answer the question?
I think so. If not, let us know. So I know I specifically didn't ask you to cover goats, but there is a question, what are the most important differences in your assumptions for sheep versus goats? And why are they different in terms of supply and demand? So I thought maybe if you wanted to tackle that, we could answer that question.
Full disclosure, not as much of an analyst on the goat side of things. So I don't know that I'll venture too far into that question, just because I don't want to say something out of turn, out of line there. But more than happy to answer anything on the sheep side as it relates to the discussion at hand.
No problem. So you may be able to, I may need more information on this one. This one's from Robert White. Can you talk about new crop lamb and old crop lamb when sold at a sales barn?
Yeah, so I think it's a little bit tricky to know as far as, new crop versus old crop, what's being sold there. Um, but I think I'll just go back to my point that, um, you know, kind of what happened in 2023 was we had some of that old crop lamb that got backed up in the supply chain and didn't get moved through. We're not seeing that happen right now. The supplies are moving through. So I would argue that old crop lambs have been moving through. We're getting the new crop lambs coming in. And so I would argue that as far as from a supply demand standpoint, things are moving through the supply chain. And so I don't really see any issues with old crop lambs getting backed up in the supply chain. And so I think we should have, as from a marketing standpoint, things move through um, fairly seamlessly.
Perfect. So we're kind of seeing the end of most of the questions. I apologize if I missed anybody, but we are coming up on an hour anyway, so I'm gonna go ahead and wrap up the questions at this point, but I'm sure that you're willing to take questions via email or through us to you. So if you guys have questions and you want to talk some more about this, feel free to reach out to us. Thank you so much for joining us today and sharing all the information. I think it's really important to track these markets when we're in the industry. So we appreciate you. Hopefully you will come back for us at some point in a year or so
Sure.
and visit about this again. Thanks to all of you for joining us today for the live event. And as usual, we will be back in a month and we're looking forward to seeing you then. So thank you all.
Thank you.